day, all. Ira Epstein of Linn Associates with your agricultural wrap-up, and this is for Thursday, and we're at the 10th of October, 2019, just after 4:15 p.m. Central Daylight Time. So a down day in grains as we had the USDA WASDE report, as I like to call it, and we got some acreage numbers and some yield numbers. To put it the way that it was, the wheat and the corn markets did not get friendly numbers, nor did the cotton. Still enough supply, bigger than the trade ideas, and that weighed on them. The bean market did have a basically friendly report, but with everything around it falling, it just couldn't carry itself to the upside. As you see in the stock market, all I can tell you is a 600-point day in the Dow, a 60-point or so day in the S&P, and 200 in the NASDAQ, and it's not over. And it's not over because we don't know what the U.S. trade negotiators have done. At 3 p.m. Central Daylight Time, the negotiations ended for the day. We're told they're going to resume. The president held the news conference at about 4 p.m. that I saw, and at that time he said the negotiations are going well. What does that mean? Does it mean that the tariff rollback's going to happen? Does it mean they're suspended? Does it mean that we have an ag deal on something? We know that today China bought more soybeans. That was how the day started out. So they continue to buy that, but in the pork market, there's still been nothing that I could see. So as we take a look at a weekly area chart of this, with all that we've gone through, you're up 7 cents for the week, and the market is trading in the 923.5 zone. When we take a look at the chart, you can't argue that the market has rallied just beautifully, and it's back into these old resistance points that we saw in the summer when the weather was so terrible. As we take a look at the swing line, we've had from right here at the end of September the pattern of higher lows, higher highs, bullish. The market today reversed. It ended up closing lower after making a new high on the move. And should this market get under 910.5, we'll have established what I'll call a trade top in the market. In other words, a poke at a new high that didn't have any follow through to it. Hasn't happened yet. Therefore, you're still in the bullish mode at this point. And that mode has support around 910.5 to 200-day average that was prior support. But if you take out that number, 910.5 now, even though it's still an overall support mode, I'm going to argue that that could be a trade top that would form in the market. No, that's not a bear signal. It's just a trade top that formed. At this point, you have bullish bias, the swing line is up, and you've made a new high on the move that got itself capped starting yesterday at the upper Bollinger Band with follow-through from that today. And when I look at momentum, I'll be watching very closely what the embedded slow stochastic reading does. Now, slow stochastics like MACD, relative strength, it's a momentum index that you're always looking to see, does momentum lead price. At this time, momentum, as you can see, is going sideways over 80. That means it's locked in. It loses that bullish thrust when and if the red line closes back under 80, which it has not done yet. In terms of the meal market, I don't think I could have been any more saying that the market peaked, in my opinion, up here. If it rallied again, I'm still looking for the resistance at the upper Bollinger Band, 100-day average. The market yesterday got up to those numbers, stayed right up in that area, and today gave it up. Okay, that's not a turn back down. But it's also not a trend because we've had a lower low and a higher high. You're in a resistance zone that is overbought as the market still got, and I'm going to stay with it, it had a friendly report. In the soybean oil, the market got very close to what I call that line in the sand and held. So now what we've got is oil gaining, as you can see, a bit on meal, but it's a one-day event. It's not the start of a trend at this point. The oil has support at 29.53. You'd have to get under 28.85 in order to break that. And even then, you'd have support all the way down here. Basically, the oil market's just whipping around on the other side of the meal and the soybeans. In the corn market, this is plain out bearish action. Why? You got up the past couple of days to the upper Bollinger Band. You were right here trying. Remember, we had these slow stochastics under 80 and one number under 80. Then it came up on Tuesday and Wednesday. Today was the day it had to decide, could it embed and change the character. It also was right up to the upper Bollinger Band. Now, if you give up from there and you take out, right here, 383 3/4, you could put in the play going back to the 18-day average. Were we trending going into the report? No, you had a lower low, higher high. And you know what I said? I said, you know, these reports, they're too hard to figure out. You don't, even if you knew the number, you don't know how the markets react to them. And boom, the market goes down. The one thing I stand behind is the 18-day average is often where a market runs back to figure out what to do next. And we are in that type of mode. You're in a corrective mode where the market is now overbought. Overbought conditions work themselves off by going sideways typically or lower. Yes, they could embed again to the bullish side, but it's very rare once they lose them this way. You remember, you lost this back here 3 days ago. It's not today. Today's just a reaction to that. In the wheat market, you still have the pattern that is good in terms of higher lows, higher highs. Now you have divergence. You've been overbought, momentum's trying to turn down, and the price 2 days ago got up to the 100-day average in the upper Bollinger Band, and it tested it again this morning before the reports came out. So you had last night, this morning's action. That report came out at 11 o'clock. You fell back to the 18-day average. Let's assume, just for the sake of discussion, you get through this 486 3/4 level. Okay, so you make a trade top and you're stuck in these Bollinger Bands. You've got strong resistance here and support back at 476 3/4 off the lower band. At this point, who's controlling the market going home? Well, you finished at 493, which is still over the 489 1/4. So until you take out that 486 3/4, I say the bulls are still in control. In the sugar market, we have momentum down, bias down because you closed under the 18-day average and the pattern of lower highs. And with today's low, it didn't quite get under 1231, but you've had that low. We don't know where this is going to end up with the low yet. Bear trade until the market takes out 1259 is what I define that as. In the coffee market, you're running that lower Bollinger Band. Notice how you're not bouncing. And very frankly, you haven't had a higher high day in over a trading week. So the market's running to the downside. It's now gotten under some key support areas that it had way back here. So I turned that way, but I can do it better by coming over here. You can see where you're at. Now we'll see if the market can pick up momentum to the downside or not. And I don't think the market's in a trend. You had this outside day up and took that out, and it still has to give me a pattern, and I don't have it. I can see the bias is down. I'm not blind, but the market is not in the pattern market at this point, not in a pattern type trade. In the cocoa market, we had just talked about this market holding the 100-day average. It bounced back to it today. You're not in a trend. You're in a higher high, lower low pattern, oversold, trying to correct. The chart's a mess. Can I say it any clearer? In the cotton market, the market got up to the Bollinger Band again. Now let's take a look at the past few days. Here's a market that if it got over this high, you negate the downtrend, which is just what it did. I was surprised it even got up there. But when it did, the upper Bollinger Band is 62.40, 62.38 was yesterday's high. Today's high goes right to that band. You know what I'm going to tell you? The first challenge of a band, the report day or not, is often a resistance zone. And look what the market did. Are we trending? We are not. We're going sideways in the action. Cattle is still bullish. You've got the embedded reading. The market has now reaffirmed the pattern of higher lows, higher highs. So the low of Wednesday was 110.45. Until that's taken out, you still have the good pattern. You have the bullish embedded reading, and you have bias up. If this market can pick up momentum, then you've got the shot here of the 113.35 level. In the feeder cattle, be careful here. January feeder cattle, you got a big freeze coming into America. You've got record snowfall in parts of, I understand, Montana, Wyoming, the Dakotas. Be cautious. You'll probably watch this on the national news. And you know, cattle are funny because you get this real cold weather. Those that are outside have to eat as much feed as they can eat in order to keep the same weight that they have. We're looking at a market with support all the way back here. The pattern is lower, low, higher, high. Hogs, problematic for me. I mean, wouldn't you think if there's a deal with China, they're going to buy that pork? They haven't done it yet. But the trap play for those that are getting complacent is you don't want to see the highs of yesterday taken out. Right here against that 100-day average, the number 70.32.5. Why? It is conceivable that if that's taken out, you suddenly get the higher low, higher high pattern and take off right into that upper Bollinger Band. Who's controlling the market going home? The bears are. You closed at 68.47 under the 18-day average of 68, let's call it 62.5. The resistance you can see is right at this number. So if the bears want to keep control, they've got to keep the market from getting over that 70.32.5 zone. Remember, we write about this. In fact, tonight we'll be bearing our customers with a lot of market research because we'll be talking about the what-ifs in grains, the ideas on where you're at in the hedging program, ideas on the weather. And we have two meteorologists that write for us. So if you're a grain trader or a meat trader, our type of information is pretty important. Then, if you get our trading platforms, we're broadcasting through the day orally, and you can go back and listen to them any time in that, as to what we're seeing in the markets, the plays, what the hedgers are doing, what the specs are doing. It's all here and all that. How do you get access to it? Simply go to our website, sign up for a free trial if you haven't done so. We'll be happy to put it on your plate. You'll get an email from us with all the codes you need to get in, how to download the software and so on. Click up here, it'll take you right there as well. I'm Ira Epstein. You have a great evening, and I'll see you all tomorrow.